I mean, whether
Mm.
somebody's buying a business or selling a business, there's, the ebbs and flows of a deal and challenges and emotional highs and lows. And especially for the seller, where they've got, not only are they still running their business in large part, but they're also having the second job of having to actually sell it and respond to due diligence and deal with all the complexity around that. So it's super hard and can be very stressful.
Welcome to our middle market moment where we speak to other professionals who help business owners build value, de-risk their companies, and prepare both personally and professionally to do the deal of a lifetime through mergers and acquisitions. Today, I'm particularly excited to welcome Greg Russell. Greg is an attorney and partner at Peterson Russell Kelly Livengood, otherwise known as PRK to those of us that have been around for a while. Greg's practice focuses on advising closely held business owners and individuals regarding business planning, M&A transactions on both the sell side and the buy side, and negotiating shareholder partner agreements, real estate, as well as commercial finance transactions, as a host of other, private placement and other transaction services on the legal front. So, hi, Greg, and welcome, and thanks for joining us.
Hey, Craig, nice to see you again, and thanks for inviting me onto your video blog, log, whatever you want to call it. So that's great.
Yeah, indeed.
So that was a good summary of what I do. I think the simple way to describe it is I buy and help clients buy and sell stuff, whether
Yeah.
it's businesses or like sophisticated commercial real estate, and then help them with the financing. So
And
try to
it's
make smooth that process out for them if we can.
and I was going to say that process is not always easy, and it takes a good deal of patience and EQ, if you will, to help clients navigate that. And as I've known you for several years, I think you're a master at, kind of guiding them through whatever that transaction looks like. Really stewarding their emotions and their not only their legal and the risk and all of that, but I suppose we should, to provide a little context there, we should let the audience know you and I have known each other for several years. We sit on a board together. We've been engaged in a couple transactions together. So some of my insights are because I know you pretty well and really have come to respect and appreciate kind of what you do and the art of it. So I want people to know that as well.
No, thanks, Greg. I appreciate that, and it's always been fun to work with you and with your team. You guys do an excellent job and managing all that EQ as well. It's definitely an up and down, right? I mean, whether
Mm.
somebody's buying a business or selling a business, it's there's the ebbs and flows of a deal and challenges and emotional highs and lows, and especially for the seller, where they've got, not only are they still running their business in large part, but they're also having the second job of having to actually sell it and respond to due diligence and deal with all the complexity around that. So it's super hard and can be very stressful for a seller and a buyer too, because they're trying to get financing and put their deal together and do all the diligence and make sure they want to buy this business. So
Yeah, it is definitely a careful balance. And, we have a saying around our shop that, every deal dies three times, right? Whether it's a hard death or a soft death, we have to negotiate or get in the middle of or overcome certain challenges. And maybe let's kind of start at the beginning. And I know you guys spend and you have lots of resources at your firm relative to get people prepared, because I think what you highlighted there was, it can be stressful. It's always going to be stressful to a degree when you're going through a life change and selling your business or buying a business. But maybe talk a little bit about preparation. And, you've encountered a lot of clients that are very prepared and things tend to go very smoothly. And then others where, somebody drops an LOI on their lap. So maybe share with us a little bit of how you assist clients really get their head right, get their legal and everything else kind of buttoned up and be prepared.
yeah, we do. We have like a little 5-step process we've developed over the years. I don't think it's anything revolutionary, but it kind of helps a client focus, and it talks about things like, hey, step one, let's determine your objectives. Step two, let's put a little kind of exit plan in place. Step three, make sure you've got continuity, because a lot of times the things that people worry about are um, making sure that their key employees are going to be around and stay through the transaction. And then step 4 is kind of figure out your likely sale targets, right? If you're selling, right, who are your likely buyers? Is it going to be a group of key management people? Is it going to be a third party? Is it going to be another family member? Whatever it is, and putting your deal team together. And then step 5 is figuring out what are you going to do after that, right? Once you've had the transaction occur, what are your personal and estate planning goals? So yeah, we try and help people all along the way with that process, and there's a lot of detail in each one of those steps and how you do it appropriately. But I always like to sit down with them at the beginning and go, hey, once you sell the business, are you feeling comfortable about your finances? And are you excited about what you're going to do, Jane or Bob, and Jane 2.0 and Bob 2.0, right? Because
Mm-hmm.
most of them have spent their life, a big chunk of their life, building their business to a successful business where they can sell it. And then it's really hard to shift into something else at that point. And what's their next step? So yeah, those are really important conversations to have at the beginning, right? And think about, what do you want to do once the business is sold, and are you going to have the money that you need, right? If your business is it worth what you need it to be worth, so that you can enjoy your lifestyle after you've sold your business.
Yeah, that's so important to kind of know your number. And, everybody focuses on the
Yeah,
sale price, right? But, you have to do the math. And you and I have both worked with, wealth managers and the like to really make sure that a client knows their number after tax, right? What is this really going to look like? And the variabilities, because things change, right? You can enter a process, and this might take 6 months, and we're thinking about a certain multiple and a certain buyer, and sometimes things change for the better, sometimes things change for the worse, which could affect clients. So they really need to be kind of open-minded, don't they, in terms of not getting locked in and not spending the money just yet, right?
yeah, exactly. I have, when I was a younger, I've been doing this 30 plus years. So it's, I've got a lot of transactions under my belt. And our firm is 25-ish lawyers, right? A lot of different business, estate planning, tax people. Um, and we do about, 25 to 30 deals a year in the middle market, lower middle market space. But back in the earlier days, I had a client, two owners. I asked them, hey, have you, is this, you're going to sell your business and you've got a pretty good idea of what you're going to sell it for. Is that going to be enough for the two owners for you guys to do this? And they were the classic two pair, right? One guy was a saver, very conservative, was like, oh yeah, I'm good. I've talked to my financial planner. The other guy was not, right? He had a high lifestyle. He spent a lot of money. He enjoyed his business, but he was like, oh yeah, I've talked to my financial guy. It's good. And then we get down to the sale, ready to close, like literally 2 days before closing. And the guy who was not the saver ran numbers with his accountant. His accountant was like, well, this is all you're going to have left after taxes and everything else. And he's like, that's not enough.
Mm,
So
yeah.
he wanted to renegotiate the deal 2 days before closing. That was not good. And I felt bad for him. We ended up closing the deal, but it was very stressful for him. And
Mm,
so I learned from that to make sure when they say, oh, yeah, I've thought about the number. Yeah, let's make sure you've thought about the number. Like, let's run that net, after tax analysis, like you said, sit down with their CPA or their financial planner, make sure they feel comfortable about that. And don't just take their word for it that they have,
mhm.
because sometimes they haven't really thought about it like they need to. So that was a learning lesson for me in one of my earlier days, earlier transactions.
Yeah, that's brilliant. And a lot of times, yeah, we want to trust the client implicitly, but sometimes it's good to pry a little bit, right? We tell folks, look,
Yeah,
we're your priest and your consigliere, tell us all the, not just the
yeah,
good things, but make sure you disclose some stuff. And you know what? I'm going to ask you, and is that enough? Have you run the numbers? And I'm going to go to your CPA and make sure we really understand what the tax is. And clients sometimes they scratch their head and go, why are you digging into that? I'm like, to protect you, really, right? So from a surprise, nobody likes
yeah.
a surprise in a deal, right?
100%. Yeah, I think that's probably the best thing, is helping them level set their expectations early on in the process. And then sometimes the number isn't good enough.
Mm-hmm.
So you can look at the business and go, and I know this is where you guys help a lot, is, hey, let's take 2 years or three and improve your business. Like, there's always areas that a business can be improved. and do some planning, pre-planning, and say, okay, this is the number we really need to get to. Is it realistic? And if it is, how do we get there? What little holes do we need to fill? And sometimes it's developing a little stronger management team so that the owner doesn't have to be everybody's he's not running the business or she's not running the business all the time day to day, but doing more strategy. Or maybe it's finances, or how their financial statements are set up. Do they do some a little more robust work on their financials? Maybe do they clean out some of those personal expenses, the sailboat or the
Mm-hmm.
car that they've got in there, or the family vacations that they run through the books, which happens from time to time.
Mm-hmm.
Do they move some of that stuff out just to make the business better? And so those things I find to be really valuable. We will sit down a lot of times with somebody like yourself and the client and talk through those issues, and then go, hey, here's 3 or 4 things that you could really, easily tackle in the next 12 to 18 months that could really improve the value of your business. Yeah, and or maybe you go out and do a little add-on acquisition, right? Like if it's a business, you could pick up a little side business that would fill out your offerings,
Mm-hmm.
and then make your business much more valuable to a potential buyer. I think having those kinds of discussions in advance with somebody can be super valuable and help them a lot. So yeah, I think that kind of expectation setting and pre-planning is really important.
Yeah, and that's a wise word relative to having third party folks in your network as an entrepreneur, because we often get head down in our own business to be able to say, hey, you might think this is creating value, but if we tweak it a little bit, right, this might be creating value. I know you and I sit on a board together, and we come from maybe different perspectives, and that's healthy to have that different perspectives to support the business owner. Um, so
Yeah,
that
you do a great job, Craig, on helping them focus on revenue and cost efficiencies and like market fit and all those kinds of things that are really important in driving a business and growing it so that it can be worth more money, right? Ultimately, which is what you want. Um, and I think I tend to kind of fit more in the like, hey, make sure you got your processes in place, make sure you're well
Mhm.
documented, make sure you don't have any skeletons in your closet, that kind of thing.
Yeah, absolutely.
And
It's a
so
great
I
kind of
think you need both of those.
absolutely rounding out that the advice is always, and it is a team sport, right? Whatever you're doing, whether you're advising a company or whether you're preparing for M&A. I do want to pick up on, and you mentioned this earlier, the work that you do, and knowing your number, and I see it all the time. They may go to their wealth manager and say, okay, I've crunched the number, I've done the Monte Carlo exercise, and if I live to 100, here's what I'm going to be able to rely on, right? But there's also the estate planning and the personal side of it, and this is where we almost counsel people to get kind of selfish a little bit and take care of yourself and take care of your family and your thinking. And even though Uncle Sam is going to get his fair share, there are some things you can do ahead of time to really prepare yourself for that. Maybe if you could spend a minute, because I know your firm does all of that, right? Not only just the transactions, but also the personal estate planning and the tax planning and all that. So maybe spend a minute talking about the benefit to our audience of really getting intentional and working on that part of your plan beforehand.
Yeah, that's a great question, I think, and a lot of people don't think about that, right? You'll see them get to the end of the transaction, and then I'm like, well, so what's next? And they're, I don't know, I'm going to go play golf for a while, or I'm just going to take a break because they were tired and they want to just
Mm,
relax a little bit, without having really thought through what they want to do. And so helping them think about that, and then that can impact into maybe they have some gifting and things. If they're financially in a good position, they can do some tax efficient gifts to their children or grandchildren or family members, or maybe they have a charity or two that's super important to them and that they want to support because they're going to spend time on that, right? Like they might
mm,
transition into the board on that charity and then they want to support it financially. And there's some super efficient ways to do that if you can do it in advance. If you can put some of that planning in place, say 6 months prior to the transaction occurring, you can get some really efficient discounts from an estate planning perspective and reduce that tax impact that might happen on a sale. And then, of course, the wonderful, if you're in the state of Washington, there's a new capital gains tax for residents of the state of Washington. So do you want to do some planning around that to try and mitigate that? And there are some ways to do that. There's some options there. So there's I'd say a kind of a toolbox of things that we'll sit down and talk to a client about that involve, transferring minority interests in businesses to family members or to third parties like charities to help reduce your tax risk. And then thinking about what you want to do, and setting yourself up in a good position to be able to do those things that you're excited about doing in the next step of your life. Because a lot of times clients don't want to give up the control of their business, right? I mean,
Mm-hmm.
I had a funny conversation a few months ago with a client who was 85. He was still running his business. Started it, and he'd been running it ever since. And his son was the now president. His son was 62. And told the client, and he was really hesitant to transition out of the business. I'm like, what's going on? I goes, well, I'm not sure my son's ready to run it yet. I'm like, well, he's 62. I mean, if he's not ready at 62, he's never going to
If
be
not
ready.
now,
And
when?
yeah, exactly. And the client was like, well, it's not really that. It goes, he just didn't have anything else he wanted to do. I mean,
Yeah.
it was part of his life was coming into the office and working on his business and spending time there. And so it was hard for him to find something else that he would be excited about at 85. And so that's fine if that's what you want to do, but I always feel like that's a little disappointing. I'd like to have somebody think about, hey, there's so many other things you can do, in your life, that after you sell your business, and you can look at other options, whether it's spending time helping other, mentoring people, or sitting on boards, right, and
Mhm.
helping people in those areas and providing that wealth of knowledge that you have. So there's a lot of opportunities there. So I like to have that little conversation kind of early on in the process to help them at least think about it. And everybody's different. They have their own personal preferences and what they want to do. And if what they want to do is run their business until the very end, okay, that's
Mhm.
great. They can do that. But there's still some planning you can do around that to make it not you have to be in the seat day to day, right? And you can still travel and enjoy things.
Yeah,
So yeah,
absolutely.
those are fun. Those are fun and interesting conversations to have.
Well, and the folks that don't prepare, right? I always think of it, and this is, I've got this little box. If something happens to me, like my wife knows to go to that box, and everything's in that box, right? And we see, and I kind of want to dig into like satisfaction, right? Satisfaction with an M&A deal, and kind of what you've seen over your career. Um, Part of that is if you're leaving people a mess, right? Even if you do want to stay till the very end in your business, but just make sure you plan everything. You don't want probate in the middle of in the middle of your business, and it's really a gift to the people that you are leaving behind. To have your act together and not hand them a bunch of problems that for the next year and sometimes longer they have to unwind and get in the middle of and all of that. So really, it's a good
Yeah,
gift to give yourself.
it's tough, right? I mean, I think that kind of succession planning, like you said, is, I think, really helpful. Like I tell clients a lot of times, hey, sit around the table with your key management team and just run an exercise where you say, hey, you're not here anymore, right? Either you left the company, you had a health problem, you can't, you died, you're not here, right? And if the owner's not here, what are we going to do, right? What happens? How do we plan for that? What's this? Who's going to fill in the gaps? People are going to do. Are we going to then sell the business? Are we? Well, what's the transition plan? And having that all thought through, at least at a high level, because if you don't do that, stuff happens. I
Mm-hmm.
had a client who owned a business. He was a sole owner. He was pretty active in it. Young guy. He was in his early 40s. He got cancer, right,
Mm-hmm.
unexpectedly, and it took him out, and it was super stressful on his spouse
Mm-hmm.
because he hadn't planned for those transitions. We ended up having to get somebody appointed to run the business for a little while then they could sell it, and it didn't sell for the value it should have, so it hurt his heirs because it wasn't a distress sale. And so there was just a lot of really challenging situations to work through there. um, and stuff happens, and so you got to think about that just like you do about your business. Stuff can happen, and so planning for that is really important.
Yeah, you mentioned something earlier too that in talking about key management and kind of their role in a transaction, both before and after, and getting them prepared. And there's kind of an adage, right? Buyers they not only buy what your historical cash flows and your EBITDA, right? All of that fun stuff. But they're buying your management team, right? And your ability and their
Mm-hmm.
confidence in your management team going forward. So I'm gonna I'm going to go from 20,000 feet to like, 100 feet real fast here. So
Okay.
based on something you said earlier, is a little more technical, but there's a couple of things that owners can do, not only to your point in terms of preparing them, thinking about who does what, if the owner was doing leases and handling the legal and who's going to do that after they leave. But there's also some things from a legal perspective. um, Maybe spend a minute changing control agreements. A lot of sellers, the worst thing that can happen in a transaction is one of your key management leaves in the middle of it before you get to closing. And there's some things that sellers can do to kind of protect themselves while at the same time honoring their management team. Maybe spend a minute talking about that if you would. I know that's a bit off script, but I think it's important for people to think about that, because everybody starts a transaction and says, well, I want a buyer that's going to really honor my management team and treat them well.
Mm-hmm.
But there's also some things that sellers should do there to kind of ensure that everything's buttoned up and everybody has, kind of some things in place that makes for a smooth transition.
Yeah, that's a really good question, Craig, and a very good thought first if you're going to be a seller, because the buyer does want your management team, right? They absolutely want them. And so thinking ahead on that, if you don't do it, then you can end up in a situation where the management team has a lot of leverage right before transaction, because the management team figures it out eventually. They know the sale's happening. They know it's a pretty decent amount of money probably. And they also know they're important. And so if you don't have an agreement in place with them, then they can stand up a week before closing and go, I want $500,000 to do this
Mm-hmm.
deal, right? And
Mm-hmm.
you don't have a lot of leverage at that point as the
Right.
seller. So planning ahead, like you said, you can do a change in control agreement or a stay bonus. So you can say, hey, I don't know if we're ever going to sell the business. But if we do, I want you to benefit because you've been a long-time key employee. And so I'm going to enter an agreement with you, which is you'll stick around, you'll stay through the transaction. You might even stay after the transaction. You agree to do
Mm-hmm.
that. And I'm going to give you a big chunk of the deal, right? Some percentage of the deal or some dollar amount, to as a contingency to stick through the deal. So it creates a financial incentive for them, and you've already negotiated it. So it's harder for them to renegotiate it at that point when you actually get to the deal. The other thing we do a lot of times is talk about deferred compensation or phantom stock arrangements, where you give a financial incentive that's not technically a stay bonus, but it's basically a phantom share of the equity, not really owning a piece of the business, although you can do that too, because if they own a piece of the business, they're going to be motivated to sell. They're going to want to stick around. But if you don't want to actually give them a piece of the business for a lot of legal reasons, then you can give them, a deferred compensation arrangement or a phantom stock arrangement that will give them strong incentive to want a deal to close because they're going to get a big payday. So
Mm-hmm.
there's a variety of little techniques you can use to financially reward somebody who's a key management person for staying around. Um, and or setting them up to buy the business from you, right? If you have like a service business or something, you can give them let them build some equity over a period of time,
Mm-hmm.
and then they can go out and get an SBA loan and finance out the rest of it and be able to buy the business from you. So there's a lot of kind of nice little options there if you think ahead, right? If you're trying to do it a week or 2 weeks or a month before closing, it's a lot harder than if you do it a year before you decide to sell the business.
And in my experience, it's typically the VP of sales that wants to hijack you.
Yeah, exactly.
He comes in and says, well, I've been, all this growth and it's all me, right? And it's like, I've got my hand out now.
Yeah.
So yeah, it's always good. We counsel people
100%. I
too.
literally had that happen on a deal. They had to close at the end of December where the VP of sales came in the week. They didn't have a deal with him,
Yeah.
although they'd had general conversations. And literally 3 days before closing, the VP of sales came in and stuck his hand out, and they paid him. So
Yeah.
it was good. It was good. The VP of sales was a good salesperson with
He's
that
doing
deal.
his job. Yeah. Yeah. No,
Exactly.
that can be frustrating for owners. The other thing I think that surprises sellers is, well, isn't that the buyer's responsibility to pay these people a bonus to stick around or whatever? Our general advice, and I don't know if this is similar to how you approach it, is, there are certain people that got you where you are today to have a sellable business, and you probably want to thank them. So that is just a thank you, right? So put some deal proceeds aside and say, hey, thanks for getting me here. You're an integral part of our team. And then there's from a change in control standpoint, there's those people that need to be around 6 months to a year after close to ensure a smooth transaction, and they're that vital to the business. Any buyer can deal with, hey, I want to leave in a year, right? Let's put a succession plan
Yeah.
together and all of that. But they, day after close, somebody walks, that creates, chaos, right? So that change of control, we always tell them, if there are people that are key to the success of the transaction and the next generation of the business, those are the people that you should consider giving that stay bonus to, et cetera. And most sellers say,
Yeah,
well,
no,
isn't that, buyer's responsibility? And it's like, no, you want it's insurance that your deal is going to go through, and that you're giving the buyer confidence that, you've done your job to prepare the management team and keep them in place.
yeah, I agree with that completely. And a lot of times it's helpful in today's market. The market is still strong, but there's a kind of a value disconnect sometimes now, because there's either a little variability in their like earnings, or the COVID was weird and now we're kind of out of COVID, and so what's the future be? And so we're seeing a lot more seller financing and earnouts and
Mm-hmm.
deals than we did 5 years ago. And so if you have an earnout, which is dependent upon future performance, it's really important for you as the seller to make sure your management team stays intact to continue to perform at the level that you anticipate if you want to get that earnout. And so maybe you're going to stick around for a little while during that earnout period, but you really want your management team there as well. So giving them a share of that, or finding a way to make that work for them so that they do stick around, they're excited about it, is really important.
Yeah, absolutely. Good word. Um, Let me dive back in. I'll come up from the 100 foot. Thanks for indulging me on that
Sure.
management team. Um, a lot of people focus on kind of deal killers, and really, sometimes you have to play defense, sometimes you play offense, right? And having a good defense wins the game often. Um, from your perspective, legally, what have you seen that are kind of deal killers that either pop up in a transaction or pop up in legal diligence or even in a preparation stage? Hey, you're kind of missing this, there's a hole in your game, from a legal perspective. A couple things come to mind. If you have L&I, unresolved L&I claims, or if you have, you're trying to sell a business that has a pension that's underfunded. I mean, there's some things that pop up. Maybe can you share a couple of ideas or examples on how to kind of de-risk some of those typical legal deal killers? If you're in the middle of a lawsuit, it's kind of hard to quantify that. You're going to
Yeah,
end
that's
up
an
with
issue.
a big escrow and a maybe, right? So maybe share a couple of ideas there if you would.
Yeah, I think the biggest thing that I'm seeing is right now, even though you can get a really good value for your business, the transaction process is a lot more robust. And so we're seeing a lot, like the buyers are digging in a lot more on diligence and looking at things that maybe they didn't before. So if you have the time and you can sit down maybe a year before close, you're thinking about starting a transaction. I like to go through our diligence list, which is the same diligence list they're going to get from everybody else, and look and kind of just do an audit of the big things. And so they fall into categories like financials, right? How your financials look strong. And the goal is to not have a surprise, because that's the biggest problem, is if the buyer gets surprised during the diligence process, that's a problem. If there's some warts with your business, which every business has warts, you want to know what they are ahead of time and explain them so that you can like put your book together and it explains and kind of puts a good spin on what's going on there. And then, like, if there is litigation or something, right, there, or a pension issue or whatever, you can know that ahead of time and you can explain it so that it gets baked in when you're doing the marketing of the business. So I like to kind of sit down ahead of time and find out what all those surprises are. Are there any we can mitigate? And then in the areas where I see the biggest ones come up are, financial, obviously, that there's some problem with how they did inventory, or their financials are not to GAAP or things like that. Those can be problems. And then looking at tax issues. So we've had a lot of times people have made an S corp election, and they didn't do it correctly, or they didn't document it
Mhm.
correctly, or they did do it right, but they just didn't document. They don't have their documents from the IRS that show that it was properly accepted, or maybe they didn't quite sign the form right, or whatever. And so that can be a problem. And so looking at those issues, and then uh, I think employee issues, like you said, an L&I issue, misclassification. If they have employees and independent contractors, did they misclassify somebody who was an independent contractor, should have been an employee? That's going to create some wage and hour and claims, and the buyers really don't like that.
Mhm.
So, and then I think data security and intellectual property. Everybody's had a data breach, right?
Mhm.
Or
Yep.
it feels like they have, or they've been
Mhm.
subject to one, or one of their suppliers has been subject to one, or vendors, or, there's just it's just everywhere. And so having a robust, even if you have had a breach, that you have a robust, program, right, and that and insurance and things like that for data breaches, so that you can avoid those kinds of issues. So those things come up. Those are the ones that have been coming up a lot, that have created real issues that people either are not comfortable getting over, um, or if they convert from an equity sale to an asset sale to try and mitigate some of that risk, which
Mhm.
can be a more negative tax impact to a client if they're a C corp, or another entity that's maybe not, it's not as favorable for them from a tax perspective. So yeah, those are a handful of things that come to mind.
No, that's terrific. That's a one that we've encountered quite a bit also lately is especially in e-commerce businesses with the change in some of the sales tax and sales tax reporting.
Tax nexus stuff. Yeah.
Yeah, and your CPA kind of bugs you and says, "Oh, I want to do a sales tax analysis," and the entrepreneur's like, "Ah, we're good, right?" It's like, no, that'll come up in diligence, and if you didn't report to the state of whatever, right, that could slow a whole transaction or even kill a transaction if it's a big number, right? So
Yeah,
yeah,
exactly.
these are getting ahead and preparing is crucial. Well, any thanks for diving in today. I appreciate it. Any kind of
Oh,
thought
you bet.
about the current market or things that would be sellers or buyers should be thinking about in the current market? We obviously have a kind of a higher interest rate environment still. It's probably going to persist a little bit. We may, depending upon the election, have some capital gains changes over the next couple of years when the previous capital gains stuff potentially sunsets. But those are two that come to my mind. But anything from your perspective that people should be thinking about?
Yeah, I think, I mean, from my perspective, the M&A market is still pretty robust, right? So if you have a good business, you're going to be able to get a good value and sell it in a reasonable process, assuming you hire a good investment bank, right,
Mhm.
like yourself, and run a good process. You'll get a lot of there are a lot of private equity firms and strategics that are still looking and interested and have capital to spend, even though the interest rates are a little higher than they have been historically in the last 10 years. So I think the market's still pretty good, and we've been super busy, pleasantly surprised about that, because I thought it would cool a little bit with the
Mhm.
interest rate environment, but it hasn't. And there's still businesses that are performing well and making good EBITDA, but I think the like I mentioned earlier, I think the big challenge is due diligence, and that is taking a lot longer, and they're digging into everything way more in depth than they would have in the past, which means a buyer is spending a lot of money and time. And so where you might have closed a deal in 30 or 60 days, now it's taking 60 to 90, maybe 120 days to get a deal done, and the seller's getting just bombarded with a bunch of stuff. So I think
Mhm.
super important to have a good team together, somebody that's experienced in M&A that can help you with all those requests. I think one of the big values that you get from an investment bank like yourself is being able to help sellers with that process. And then I think, from our perspective, trying to help them, identify those potential diligence areas of concern and trying to clean those up prior to going into a transaction. So that's the kind of big suggestion I would have for people is start a little bit earlier maybe than you would have otherwise, um, and make sure you take the time to prepare your business for those, so that you can avoid some of those surprises right during the diligence process.
Yeah, that's great advice, Greg. Appreciate it. And I think I want to let's let the audience know you're going to share you referenced it earlier, but you're going to share kind of a 5-step document that your firm uses to help people kind of orient. So we'll definitely put that in the show notes. We'll attach it to everything else. Thanks. You're very gracious for sharing that with our audience. And I do want to thank you for joining us on the Middle Market Moment, and maybe just share for folks that are kind of still tuned in, if you will, as to the best way to get in touch with you.
Yeah, phone call. You can give me a call on the phone. You can go to our website, which is prklaw.com. My number is 425-990-4047, or my email, grussell@prklaw.com. Those are the two best ways to get me. That information's on our website as well. So really appreciate the opportunity to do this. It was fun, right? I always enjoy talking to you about deals. So.
Yeah, absolutely. Well, deal junkies for forever, right? Here we go.
That's
well,
right.
well, thanks, Greg, and thanks for everyone out there listening. And good luck on your journey to the deal of a lifetime. Thanks, everyone.